All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Friday morning market wrap up. It is 11 a.m. Eastern Standard Time on 12/23/2022. Happy Christmas Eve, everybody. But we got some stuff to pay attention to today. Let's go ahead and take a look at what the charts are saying. So we did have some important data points come out this morning. So we saw the durable goods orders come out. The previous was 0.7. The forecast was negative 0.6. And the actual was negative 2.1. So we went from positive 0.7 to negative 2.1. So that is basically like a negative 400%. Now they were expecting negative 0.6, but negative 2.1 is, literally over 3 times that amount. So that is a pretty big miss on durable good orders, which obviously, is a decent, it's a different way of looking at inflation and what's in the pipeline coming down. So that is a good sign for inflation. Personal spending month over month, previous was 0.9. The forecast was 0.2, and it came in at 0.1. So we went from 0.9 to what was supposed to be 0.2, a big decrease. But actually, we went from 0.9 to 0.1, which is, basically 9 times. So it's down, 90% over the previous month over month number. So big difference. Now, also, seasonally adjusted with the holiday season and everything like that, that's even more shocking to see it down that much. And then finally, we have personal income month over month. Obviously, this is a key thing that the Fed has talked about on multiple occasions, because theoretically, at least, some people's theory, the wage inflation is what potentially causes sustained long-term inflation. Because as workers need more money to keep up with inflation, they get more money. The employers don't want to lose them. Therefore, they get, higher income, more money to spend. Then they have to spend that money on inflated goods. Then they need more money. So it's just like this never-ending cycle. So the previous month was 0.7 month over month. Forecast was 0.3 for this month, and actually it was 0.4. So we're seeing personal income month over month is going up at a slower pace, faster than expected. So overall, we've got basically a big miss, pretty much right in line with what we were expecting on personal spending, and then a little better off on personal income. So, what do those numbers mean? Really nothing. The truth is, unless we saw some drastic, massive number on those, which, obviously we see a little bit, but nothing too crazy. I think obviously durable goods could be something to pay attention to, but we need like more than a single data point on this stuff before we start like giving too much credence to it, in my opinion. Every time any data point comes out or any word comes out of any Fed official's mouth, people just jump all over it and immediately are trying to like pull out their secret decoder rings to figure out like, what that means. And the truth is, I think the biggest thing is, managing reality versus expectations, or expectations versus reality. If something is expected or forecast, the market is essentially, quote unquote, pricing it in already. So it's only when the reality is far from the expectations that the numbers really make much of a difference. Overall, I think the most important thing, if we're going to watch inflation, is let's watch the trend of inflation, not a single month over month or year over year number. Let's watch the trend. So what's up, Durwood? Good to see you. Merry Christmas. Merry Christmas to you too, brother. Happy holidays to everybody out there as well. Loud and clear. Appreciate that. Scotty Scotsman in the house. What's up, man? Merry Christmas to you, sir. Little Santa in the chat. Santa Claus. All right, so let's take a look at some charts. Okay, so obviously we see a pretty big shakeup right now in the bond market. It was a big deal that essentially what happened was, for a long time, Japan had basically like their equivalents of a Fed put. It was the Japanese central bank, put on the market like, hey, you know, instead of being stocks, we're talking about bonds and rates, but same exact thing, full on financial planning. And what happened recently was they basically changed it up. All of a sudden, the put is gone. They let rates go up. And that is a big freaking deal. So that movement in the JPY relative to the dollar is going to cause some weakness in the DXY in the meantime. It's also going to cause weakness in everybody else's treasury markets, technically, because suddenly there's a change between where you would potentially put your money if you were living in Japan, or, making your money income in Japanese currency. So it could be a big change, but again, it's just all relative to everybody else. I don't think it's massive. I think the news is more of an event, and then obviously the big move on top of it. Any rate yield, I mean, is just massive. But I mean, there's a reason shorting Japan is the widowmaker. Let's be real here. So what we're seeing from TNX is actually like some strength holding above the 821, about to get the bull cross, filled that gap, back testing resistance. So we came down, tested support, found support. We're moving back up, trying to build momentum back to the upside. So far, so good. Not crazy to think that this is going to go on to put in maybe one more high. We'll see. I mean, we have basically now until the beginning of February before another Fed meeting. So this thing could potentially put in one more high in the next couple of months. But I think it's worth paying attention to the potential that we're at least likely going to be putting in a short-term top at some point in time. The big risk, or the big trade volatility, whatever you want to call it, is going to be if we start coming back down and then we see another big inflation spike. And that is what would, basically cause massive spike in something like TNX or sell off in bonds, etc. TLT, whatever we're looking at. So US oil is next. So again, been just getting absolutely decimated, just melting down. And now we're seeing a little bit of strength, a back test of that previous level. So, basically the exact same thing, but opposite. We're going down here and then we're back testing our previous support as resistance. We'll see if we get back above it. We have the 821 clearly in a bear market, clearly have taken the bear cross. We came down to a pretty low level, basically the low 70s, found support at $70. Not surprising. Nice round number. People thinking that's the bottom. I'm not convinced yet. We have a series of lower highs and lower lows, and obviously we're below the moving averages, and both moving averages are pointed to the downside. That looks like complete trash to me. So what do I expect? I expect another in a series of lower highs and then lower lows. So we saw the big move up in the VIX exactly to our target, came all the way back down, technically put in a higher low for now. We're seeing it back in that range. This has been the easiest thing ever in all of existence. When the VIX comes down to 20 or sub 20, time for a pop. So even though the VIX was, basically just structurally melting down here, and I know people look at this stuff and they think it looks super suspect. Like, oh, how is volatility just constantly going down? That's the fear gauge. Everybody's either not afraid at all or they're afraid all at once. So it does not surprise me, but I would be ready for this thing to be in the mid 30s very, very soon. It looks like it's ready for another big spike to the upside. We'll see what happens. So Dow Jones, we got the back test of the 200s. As expected, we are still above them for now. As long as we hold above this level, it looks good. I mean, we see stochastics have come all the way back down to the downside, bottom of the range. We see quite a bit of weakness in the TDMACD. Slope line is still blue, but at this point in time, it looks like we're ready for a relief rally, honestly. I mean, could it go down a little further? Sure, but if it does, if it loses the 200s, it's going to look really bad. So this is, basically line in the sand. Hey, if we're going to go to the upside, if we're going to flip back into a bull market, if the Dow Jones is going to start looking thick and juicy, making gains, it's got to hold above 32, 650-ish, roughly around there, or at least 32, 500, 450. And if it does, the longer it stays above that level, the better it looks. I was thinking about doing the monthly, like year-end / wrap-up today, but we really have a whole nother week, so we'll either do it Wednesday or Friday of next week. I know it'll be crazy with the holidays, but usually right after Christmas, everybody's just looking to get back into the fun stuff. So SPY on the daily, very weak. A series of lower highs and lower lows. Clear rejection off the 200 exponential and simple, both still powerfully angled to the downside. Re-entering the bearish control zone. Looks terrible. The Dow Jones looks good and looks potentially ready to flip into a bull market. SPY looks terrible and clearly getting rejected. QQQ, NASDAQ, same exact thing. Lower highs and lower lows. Threatening the lows. Literally, a couple dollars off cycle lows. That looks like trash. IWM, exact same thing. Complete trash. Holding above our fib level for now. But again, literally like $9 off of the lows right here. So got to be real careful with these weak ass indices right now. I'm obviously trend following. I like momentum. I like to go where the money is going. I like to, Wayne Gretzky, skate where the puck's headed. That being said, of all these indices, you have basically like two rational arguments you would make. One, the Dow is strong. So if I'm going to go into an index or keep putting money into these markets without being a stock picker, I'm going to at least pick the good index. That's, the rational way of momentum thinking. The other option is to think, the opposite and say, oh, okay, well, the Dow Jones already moved. It's the strongest. So if we are going to go into a bull market, I'm going to buy these other trash indices like tech or profitless, garbage, small businesses, or whatever you want to say. What's small business? I'm talking about the Russell, obviously. So those are your options. You either say, oh, well, the other shitty underperformers are going to catch up, so I want to buy them now. Or I'm going to buy into the good one where all the money is going and all the momentum is at. Obviously, I'm a momentum trader. I'm not trying to, pick the worst index and then hope that it performs the best. I'll just pick the best index and then just consistently be a winner. But it's fun if you are losing every game in the season and then suddenly your competitive kickball team, wins one game, like via Grand Slam. Sure, it's exciting, it's fun, but you're still a loser. You lost every other game. So that's how I look at trying to buy these like trash companies, trash stocks, trash indices. I would rather just be the winner all the time. But again, maybe you just want that super extreme high and super extreme lows. But me, I just like to win. XLE, so we're seeing a little pushback up here. As long as we're putting in higher lows, this still looks okay. It does seem like it wants to come back down to 200 exponential and simple. There's been a lot of, I don't like to use this term, and I don't use it loosely, but manipulation in the markets and a lot of uncertainty. So, call it what you want to call it. Is releasing ridiculous amounts of SPRs manipulation? Yes, 100%. You're manipulating the supply. You're unloading massive amounts of supply on the market. That is definitely manipulation. Sure. Okay. Is China being locked down by their oppressive government causing economic, massive amounts of economic uncertainty or less consumption or production or whatever? Is that manipulation? Yes, the government is limiting what would normally be taking place in the private sector. So sure, it's manipulation. So is there a bunch of manipulation right now in the energy markets? Yes, there's a ton of manipulation. There's an absolute ton of manipulation. But that's just reality. Like calling everything manipulation and saying it's not fair and this, that, and the other. Well, if it's manipulation and it's so clear and so obvious, why don't you just get on the other side of the trade? It makes no sense to me. People are like, oh, I would be winning right now if they weren't manipulating the markets. It sounds like the end of like a Scooby-Doo cartoon. Oh, we would have won too if it wasn't for this pesky manipulation. Oh, like people are just so dumb. If it's that obvious, if there's clearly manipulation going on, get on the other side of the manipulation. Just, rant over. So monthly Dow Jones here, a couple days left. This is a big deal. If this turns into a bearish engulfing candle, especially if it closes below 32,400, this looks really bad and like a rejection. Doesn't mean it has to get completely rejected. Could it strengthen and move back to the upside? Sure, but it doesn't look good. We see obviously inflation is coming down here. This is the new inflation indicator. I haven't published it yet, but only just because I have been busy. So we see inflation coming down here based on, the monthly chart, obviously. This is where we would expect to get a bounce when the histogram meets the slope line. We would expect to get a bounce, a lower high, and then continue rolling over if that's going to be the case. So that being said, is that going to correspond with the Dow Jones? Is inflation popping back to the upside going to push price higher? Is it going to come down? I mean, we'll have to see. We went through and did a lot of like correlation, causation type scenarios with this. But, oftentimes, and what we need to be careful for, when we see these big spikes in inflation like this, a massive run up in inflation and it comes down, once it hits the blue slope line right here and then crosses down below it, you would think based on the markets and what everybody's talking about with inflation, that would mean, okay, inflation is going to go down, everything's going to rip back to the upside. That's not necessarily the case. That is not necessarily the case, because here we see a big spike up in inflation. We come down, we hit this slope line right here. The Dow Jones pushes back up and tries to leave this bear market. We're below the 8 and 21, and then it actually gets rejected. Inflation continues to come down substantially, and the whole entire time, the Dow Jones completely melts down. So here we see the exact same thing. The inflation, and again, this is not currently available, but this is the TJD CPI inflation indicator, which is going to be released soon, published soon. But that being said, we see the inflation, again in 2000s, spiking up here to pretty high highs, coming back down. We see the little bounce off the slope line here. It pushes back up to another lower high, avoids the cross, breaks down, and then we see a similar situation. We break down below the slope line. Inflation is coming down consistently for months after months after months, and the whole entire time, what's happening to the market? It's melting down. So this whole idea from all of these, are they morons? Are they liars? Are they just basic bitches repeating what they hear from everybody else? I would say yes to all those things. I would say yes, basic bitches for sure. And I don't mean that as like derogatory towards women. I'm talking about people. So, again, same exact thing right here. Inflation comes down, we lose the slope line, and then what happens afterwards? Pretty decent turn down in the markets, another 22% downside after a pop. So, maybe we should pay attention to this and like use our brains and also like put in the work for ourselves. Because if we just listen to everybody else, it's just a bunch of retards repeating the same thing over and over again. That's not even correct. And we see it. We see the examples right here. So if this inflation is in fact coming down, why would the stock market come down as well? Well, because the inflation is what's causing the stock market to go up. Everybody was talking about earnings going down, and we talked about how actually, sure, earnings will go down eventually, but if you're early, you're wrong. The same way if you're late, you're wrong. And what I mean by that is everybody was calling for, inflation come down, or earnings come down rather, and calling for all this inflation. Well, we got the inflation. Why didn't the earnings come down? Well, obviously they didn't come down because everything costs more money. So if I'm selling 100 widgets and then all of a sudden there's inflation, so I'm still selling the exact same 100 widgets, but I'm selling them for 20% more, at the end of the day, as long as I'm not paying way more in, sunk costs, fixed costs, variable costs, labor, whatever it is that goes into this widget business, as long as my costs haven't gone up by more than what I'm making in profits, the earnings are even better. So the inflation actually fuels the earnings to make the stocks better so they can trade at higher multiples so the market can go higher. So if that's the case, if inflation helps the stock market, and if you're like, well, that doesn't make any sense, you don't understand how stuff works. Oh, okay. So the whole entire time when the inflation is ramping up, what is this right here? This is the Rona crash, okay, in 2020. This is the Fed allowing inflation to run up. This is the Jerome Powell slow blow, okay? It's his birthday, once a year, he gets that BJ. So what's he doing? He's sitting back and he's enjoying it, okay? He's trying not to bust his nut too soon because he wants the inflation. He enjoys the inflation. It's literally their mandate. But they also have a mandate for price stability. So they want 2% inflation so that they can basically spend money that they don't have, aka rob buying power from, in this case, the US dollar, American people, whatever, so that they don't have to run as big of a deficit. So really think about it. What are the two tools for the government to fund stuff? Okay. They can run a deficit or they can get the money in taxes. Well, if they're running a deficit, they're basically just borrowing spending power from the future. So that's really just the same exact thing. You're just charging stuff on your credit card, eventually saying, hey, I'm going to pay for this. So in all reality, the only other way that they have to actually fund these programs is through inflation. They basically kill the buying power of the dollar into the future, so it costs less money for them to pay off that debt. So if those are really like the 2 or 3 possible scenarios, of course the Fed wants inflation. It's a better way for them to be able to devalue currency. It's a better way for them to spend money that they don't have. If your only 2 choices are a credit card and borrowing now at low interest rates and then paying back that money in the future with, a substantially weakened currency, boom. So that's it. So it makes perfect sense. So as long as that happened, everybody has been talking about this inflation and how it was going to do all this stuff and everything, but nobody can look. I mean, a child can look at this right here and say, oh, look, that's a bottom right there in the Dow Jones. And then it raged to the upside. That's a bottom right there in inflation. And then it raged to the upside. So here we are, peaked out basically at like almost 9% inflation. Dow Jones peaked out up here at almost, 36,500, almost 37,000. Inflation rolling over, Dow Jones rolling over, bouncing the slope line right here. Is this the bounce that already took place? Obviously, we see there's a lag between what's actually taking place with inflation and what's actually taking place with the Dow Jones. Technically, Dow Jones top is right here. So we'll flip that red. Okay, so that was the top on the Dow Jones. Where was the top on inflation? Oh, okay, well, that was over here. So months later. So what is the difference in time? And this is not exact science, but if this was in January of 2022, and then 1, 2, 3, 4, 5 months come by, and then inflation tops in the indicators, okay, we see there's roughly a 5-month lag. So that's potentially useful data. This happened really quick back here. So we can try to kind of do the same thing with the bottom of the stock market. It's not going to be nearly as reliable, but basically the stock market bottomed in March of 2020. Obviously, we know what was going on then. And then we see inflation bottom a couple months later in May of 2020. So we see a couple month lag here on the bottom. We see, what did I say, 6 month? 5-month lag here on the top. So if this right here is basically bouncing the slope line, without getting too crazy, is it possible that we actually saw the bounce take place in the stock market already? And that this was actually the bottom right here? We bounce 1, 2, 3 months later, 1, 2, 3 months later. So we'll see. I don't want to get too like crazy and too like fantasy land, imagine the potential possibility. But we see there's clearly a lag between these two things. We see they're clearly massively correlated. So if, in fact, inflation is going to come down, which everyone says, there's only 2 camps right now, okay? There's the retards that have been saying there's going to be inflation forever and are still calling for inflation, and inflation's never going to go away. And every once in a while they're right, because sometimes there is inflation. But keep in mind, those same people have been calling for like hyperinflation and the dollar going to zero and all this stuff. So they've been extremely, extremely wrong. Even when they were right, they were still wrong. So that's not good. And then there's the people saying, oh no, the inflation, it's going to go away. Everything's going to get better. And then the stock market's going to rage again. And that's like the general consensus is basically, oh, it's good. Inflation comes down, stock market goes to new all-time highs. But we can see here very clearly a correlation. I'm not saying the causation necessarily, but we just went through that as well. The inflation likely is what caused this massive run up in the market. The money printing, the inflation, all that stuff is what caused this ridiculous new high, and this euphoria over the last couple of years, aka the everything bubble. So not crazy to look at this and simply say, okay, it looks like inflation is in fact coming down. Is it possible inflation spikes up again? Yes. Therefore, if inflation is coming down, likely the Dow Jones and other markets come down. Is it possible that if inflation spikes up again, the Dow Jones spikes up to new all-time highs? Yup, certainly is. So that's what I'm looking at right here. I'm looking at a bunch of people using a certain narrative, but we can see here as clear as day that the narrative is actually completely wrong. So what does that mean going into the future? It means if inflation spikes back up, get ready for new all-time highs. If inflation continues to sell off, get ready for new lows, in my opinion. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here's our 210 spread. So we have the 2-year is like the blue and green area. The 10 is the orange area. The spread is obviously all the orange right here, or where the blue is on top right here. So we see massive, massive spreads during the sell-offs, and we right now have a massive spread at the peak that we've never had before. So does this look like it's getting ready to roll over? Does that mean it's the end of the cycle? What's the deal, and how do we know? You know, obviously we have this descending resistance line right here. We have marked the bottom, the top, the Fed pivot, and the recession. Very, very important to note in this, the reason I have this, and TC is just time cycle. You know, essentially I just picked, you know, roughly the bottom, roughly the top, made the tops line up. And, you know, here we see this was obviously like an outlier event, the 2008 financial crisis, GFC. We did not see that pop again in 2011. So instead of seeing a top right here, we saw like basically another leg down to a new bottom. So that was a strange scenario right there. But again, look how well all these red lines line up with all the tops and then this one outlier bottom. And then again, the green, you know, down here at the bottom, down here at the bottom, down here at the bottom, down here at the bottom. So there's definitely something to the time cycle analysis. Why is that? Is it presidential elections? Is it the moon cycle? Is it alien, you know, space lasers? Who cares? I don't care. But I mean, it clearly works. So using that roughly going into the future, that's telling us, hey, likely we're going to see inflation top on the 210 spread, yield top rather, in like March of 2024. So this is saying we actually have a while still to go. Now, is it possible it tops out right here, kind of goes sideways, and then we see it come down? 100%. So, you know, this is not like carved in stone. But that being said, we see the TC tops and bottoms are important. We know that when we're looking at this chart, the thing we're looking for is not any of this bullshit, the yield curve inversion to start or anything like that. What we're looking for is the flip, because what we see is, and this is again just the 210 charted on here, and then I have the TDMACD, I'm sorry, the TJD master on here as well. So when the 821 bear cross happens, you know, right here we see the pink and the red, and they start going down into a bear market, that's obviously rates coming down as well. So we see a clear indicator when that rolls over that we're topping. So again, we see another one here, we see another one here, we see another one here, and then another one here, and then obviously we're still up here right now. So everybody calling for the bond market or the bond market itself saying, oh, yields are going to come down, it's over, it's done, nah, we're not going to have the inflation, you're wrong, all this stuff. Well, according to the 210, not necessarily even the spread, but the actual rates, that's not, we're not sure about that. You know, we broke out of this massive descending resistance going back here to the peak in 1990 on the 210, the 2 and the 10. I should be more clear about that. But, you know, essentially measuring not only the level of the 2 and the 10, but also the spread between them is important because it gives us a ton of extra info. So we have a technical breakout. So it's not crazy to think this starts actually coming down, rolls over, and then next thing you know, the Fed pivots after the pivot. So rates start coming down, and then actually we, you know, end up in a shit show, and then maybe the government starts spending $1.7 trillion left and right. Maybe, you know, we go into a recession, depression, whatever, some kind of new war or continuation of the current war, whatever the hell you want to call it, you know, and then we see another spike up here. So, you know, we can't rule out these scenarios just because everybody is saying, oh, that's it, the yield curve is the deepest it's ever inverted, it's starting to roll over, inflation's coming down, rates are coming down, the bond market's saying there's going to be no inflation going into the future. Sure, okay, the bond market is also wrong as fuck. Everybody talking about how smart the bond market is and how it price everything in. Oh, really? Ask anybody that was invested in bonds how the bond market went. You know, if they were buying something like TLT this year. Wreck City in this bitch. So everybody talks about how smart the bond market is, but actually, no, they got their dicks kicked in. So congratulations. So that being said, the reason we're touching on this chart, obviously, is we're coming up on the monthly close, the year-end close, all that good stuff. So we're going to be getting some new data points. And then also, we have the big pivot coming up, right? Everybody's expecting the pivot in whatever. Maybe as early as February. You know, we had that meeting right at the beginning of February. Likely if our next couple data points come in nice over, the remainder of, it's pretty much just all of January. But, December's numbers coming in and everything. If they come in nice, everything looks good. We probably get 25 basis points in February. And once we get 25, potentially that's the last hike. So we don't know exactly when it's going to be, but, let's just say this pivot comes in February, end of January, early February, whatever. Let's say this is the official Fed pivot. Okay. Obviously dotted line means hypothetically. So let's look at this chart and see what happens after the Fed pivots. Okay. So we see the Fed pivot right here. And that was, a precursor to the yields coming down consistently. We see Fed pivot here, yields come down consistently. Fed pivots here, the double dose of consistency. And then again, Fed pivots here, yields start to crash. So if that's in fact the case, if the Fed's about to pivot, likely we're about to see yields crash. Okay, so what else happens and in what order? Well, every time the Fed pivots, we go into a recession a few months later. Every time the Fed pivots, we go into a recession a few months later. Every time the Fed pivots, we go into a recession a few months later. No Fed pivot right here because it's a double dose of downtrend. And then, of course, the most recent Fed pivot, Donald Trump put Jerome Powell in a headlock, give him a wedgie, and also a wet willy publicly. Everyone saw it. It was very, very embarrassing. Or maybe he was into it a little bit. Both of them. But that being said, you're like, oh, wait, what? I thought you loved Trump and hated the Democrats. No, they all suck. They all suck, okay? Everyone sucks. All the politicians, all the corruption, everyone. I only make fun of the Democrats more often because they're in charge of all the fucking up that's been happening lately. So that being said, yes, Trump is a clown as well. I'm sorry, but it's true. But also, he's our clown, so whatever. Fed pivot, recession. Okay, so we technically already got a recession, right? With the last Fed pivot right here. And then maybe we kind of possibly got a recession right around here. I mean, it's maybe we count it, maybe we don't. Maybe it was recession, maybe it wasn't. Okay, but who cares, right? Because that one doesn't matter. That was a bonus, maybe recession. Because we know that every time a recession has happened, it was following the Fed pivot. So the Fed probably saw what was going to happen into the future and then pivoted because they said, oh shit, we're going to cause a recession. And then they pivoted and then they were like, yep, we did it. We caused the recession. So that being said, if the Fed is getting ready to pivot right here, maybe, possibly, probably, who knows? Even if it's a little further out in the year, we know shortly afterwards, here comes a recession. So that's a lot of stuff telling us, with just these couple charts, the new inflation indicator, and then also the 210, the spread, the whole dilly. That's a lot of stuff telling us actually, probably earnings are not going to be as good as we thought if inflation comes down. Actually, stock market's not going to look that good if, in fact, inflation is coming down, which is literally the opposite of what everyone's saying. And actually, if the Fed does, in fact, pivot right here because inflation's going to come down, well, the yields are going to come down as well, and then we're going to end up in a recession. So, I mean, you can make your own decisions, obviously, and none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But when I look at these charts and I use my own personal brain instead of just relying on other people's lack of brains, the main scenario to push for a big bull market or big run into the year is literally the opposite of what everyone's saying. So if you think Dow Jones going to new all-time highs, if we're going to get that bull case scenario we talked about, likely we're going to have another big spike in inflation. So is that the extra 1.7 omnibus spending bill that causes that? No, it's probably going to be delayed months after that. So we'll have to see. I mean, could it be energy prices spiking again as the economy starts taking off? Could it be a spending bill? Could it be, escalation in the war? There's a million things that it could be. A million things that it could be. Could it be other countries causing it and not the U.S.? Less likely, but possible. But I just think everyone should re-examine the base case that they're hearing from all of the talking heads or all of the analysts, technical, fundamental, whatever. Because the bull case scenario is kind of the opposite of what everyone's saying. Everyone says, oh, if inflation's coming down, the Fed pivots, then we can go to new all-time highs because the Fed is mean and they're hurting the markets. But in all actuality, if the Fed pivots, that means the inflation's coming down. If the inflation's coming down, it means we're going into recession. If we're going into recession and inflation and the equity markets are directly correlated because the inflation is what was causing the extra earnings, therefore the valuations go up. Well, if the inflation comes down, we're probably going to go into a recession and the valuations are going to come down and the stock market's going to come down. But if everybody's wrong about all of that, then actually, if inflation spikes again, probably go to new all-time highs. So literally the opposite of what everyone's saying. Peter Schiff's like, oh, the inflation, it's not done. We're going to hyperinflation and everybody's going to not be able to afford bread and it's the gold and the silver. Sure, I get it. But also, if inflation comes back, equities will be at new all-time highs. Congratulations, Peter. Congratulations, Petey. You don't even get it. And if the opposite happens, and Peter Schiff continues to be a moron, but keep in mind, too, I like Peter Schiff, and he does put out decent content. But also, it's like playing an old broken record. So let's say he's wrong. Let's say everybody else is right, and the Fed's winning, and they did it, and inflation's going to come down. Well, then also, the markets are going to look like shit. So either one of the base case scenarios for like literally everybody you hear talking is completely wrong. And there's proof right here. And then we'll look at it a year or 2 or 3 from now and we'll just all laugh from the yacht, from the private island, because somehow the entire world doesn't understand how these markets work and simple connections, correlation and causation. All right, so let's talk about the meltdown. So Tesla, all right, here's the thing. So obviously this trade setup did not work out. The bounce right here, no skin off my back. We broke down, hit our next target. We were talking about this potential setup. Didn't even get an opportunity to jump on this thing. Not that I was like trying to pick knives. I mean, I was definitely trying to catch knives. But didn't even get an opportunity to step on this thing before it broke down from the next channel as well. So is this going to be the capitulation of Tesla? Stop losses are going to get hit. This thing's already halfway to the next level. We saw barely a stall at the 382, and now we're halfway down here already to the 0.5 and the macro 382. The green versus the blue, obviously, which is, not knowing for sure if people are going to use the 2019 bottom or the Rona bottom. Likely people are using both. So we have a blue and a green fib. Well, the blue and the green line up almost perfectly down here, the 382 and the 0.5 at our green box. And that's where it looks like we're going. So somewhere in between 106 and 100. So 100 to 106. I'm going to take another stab down here at the bottom. So, but again, Tesla may not be the best one to try to catch a knife on just because it seems like everything is kind of blowing up. So definitely would not play with Tesla for the faint of the heart. So Microsoft obviously topped out here. We got our nut. We got the trade set up. We busted. We're out like trout. And then it's starting to melt down. 821 daily cross. Clear rejection. Lower highs and lower lows. Very clear downtrend. Very clear bear market. Looks like it wants to come back down here and retest the lows. So obviously this trade setup is done. We'll hang tight and see what happens. Are we going to try to get some kind of double bottom support down here? We'll have to see what the indicator oscillators and current market looks like. You guys know I'll be looking for some bullish divergence, try to pick bottoms, catch knives, all that good stuff. So Apple is next. Still have the active short on Apple. Expecting a big leg down here. We're getting closer and closer. The longer we hang out at this lowest low of the cycle since our all-time high, the more likely we are to break through it. So we're just hanging out here. People are hoping somebody's going to come in, buy this up, save it. Is it going to happen? Maybe. It definitely could. But we broke down from this ascending support. We back tested it, pushed up here, got rejected again. We're below the 8, we're below the 21, we're below both 200s. Apple is clearly overpriced and has a lot of headwinds. I just don't honestly see fundamentally, and you guys know I don't like to look at the fundamentals and compare them specifically, but the fundamentals for Apple going into the future, if we do go into recession, people are less likely to buy as many iPhones or iProducts, whatever. People loaded up on technology going into the Panda and all that good stuff. So, maybe people don't need as much of that stuff. They already got their home computer, their office, all that stuff. There's extra stuff on the secondary market, etc. You know, the Craigslist, the eBay, the whatever. So that being said, they're leaving China, trying to reset up in Vietnam, or no, was it Thailand? Oh my God, I can't think. I'm brain dead suddenly. I mean, it's been happening slowly and then all at once. I can't remember where they're setting up at. Some other country that's not China. So is that just going to go off without a hitch after like decades of working in China? I doubt it. There's all kinds of just potential fundamental headwinds for Apple. And it basically is just hanging out at the highs. And we know Warren Buffett is way, way overweight in Apple. I mean, he's pulling like amateur moves right now with like his cult-like mentality towards Apple. So that being said, if we do start to see, I don't want to say margin calls necessarily, but, you know, some weakness, some sustained selling, it's not crazy to think we come down to the 382, we get a little bounce. If we lose that level, you know, we're talking about Apple at $99 before long. Now we're still up here at pretty decent levels, 131, but you know, that's a roughly 25% drop from where we're at right now. I mean, we're still looking for the remainder of the trade setup to play out, which is, I mean, that's another 13%. So we'll see. This thing looks like it could get nasty. Now, the truth is, shorter term, it's pretty beat down. It's pretty beat down. So whatever the next big move is, you know, if we get another big leg down here, it's probably at least short term a scalping opportunity. We shall see though. Google at the lows. I mean, it's back at the 0.5 at the lows, like literally a couple dollars off the lows. You know, $89. So, you know, we've been nailing it with Google, obviously. It's getting absolutely shellacked. Clear bear market. I mean, this thing just looks like it's ready to just give up the goat. Or the ghost. Give up the ghost. Oh, God, you're fucking killing me. So 618 seems likely on Google right here. 76. Meta, you know, had that gap fill, had that little pop up here. We'll see what happens. It's trying to build some momentum. Indicator oscillator is trending down while it goes sideways. You know, this thing is either setting up. Oh, man. I mean, this is a total coin toss, in my opinion, right now. Because either setting up for a 37% move back to retest to 200s, or it's getting ready for the next leg down 28% to complete that. So in my opinion, coin toss right now. I do not know where this is going. My bias obviously to the downside because there's a bunch of resistance overhead and it looks like trash. Longer we hang out at resistance though, more likely we are to get that little pop to the upside. So Amazon gap down here, new lows. Congratulations on the new lows. We did it. I mean, it's like, you know, literally at the lows. We completely gave up 100% the entire rally. From the bottom of Rona, massive rally to the upside, all the way back to the bottom of Rona. So I'm looking forward to seeing the year-end numbers on this thing because I have a feeling that I'm not the only one who sees Amazon with a net loss for 2022, which sounds insane. Gold just hanging out to 200s. People getting awfully bullish on metals right now. The price targets are starting to sound insane. I'd be real careful on this thing. In my opinion, this is the one thing on gold. This thing is literally hanging on by a thread. I mean, it was looking disgusting. Got a crazy pump back to the upside, and it's holding above the 821 for now. This does not look like a good chart to me. This does not make me, if you were like, oh, show me a gold chart that looks really good, and I would like show you this and be like, yeah, here it is. Look how awesome this looks. This looks terrible. Looks terrible. It doesn't look as bad as it did a month ago, but it looks terrible. So I'll be very careful getting bullish on gold right here. I mean, this is just a textbook dead cat bounce. A high, a low, a lower high, a lower low. So what's going to happen here? I'm expecting a lower high. We are picking up some momentum on the weekly. It is possible. You know, what are we going to do? Come back up here to 1911? Maybe. So 10% upside potentially. I'd be real careful with this. And silver is definitely getting ahead of its skis. I mean, the same way it did to the downside, it is to the upside. So we have a slightly higher target here. I'm looking to see that $25 mark get hit, but this does not look sustainable. That being said, it's worth paying attention to the 200 exponential crossing above the 200 simple. Now, of course, because it just happened, got rejected and failed right here. That's going to be fresh in our minds. We need to look out for that. But we shouldn't just presume that gold and silver are going to fail. Trend-wise, not like their existence. Silver juniors looking weaker than the underlying. So they got ahead, looking stronger on the way up here. And now they're looking weaker as they hang out. Which is surprising because, I mean, the balance sheets on a lot of like these miners and stuff are in pretty good shape. Metals are at, pretty high levels. I don't know. Pretty crazy. GSG breakdown, got the new lows in here, just lower highs, lower lows, just getting wrecked. Meltdown continues. We're back testing the breakdown of the channel. So we hit one box, we back tested the breakdown. We confirmed into a bear market. This looks rough. Obviously, commodities and energy combined, not looking so hot, especially since that was like the play of the year. LNG, Cheniere Energy. So it hit our target. We got down here to the blue box, to the white support that was resistance. We're back testing that support. It's also both 200s. We're in the bearish control zone. Bunch of red histograms. We're very low. Looks like this thing's ready for a pop to the upside. So, matter of fact, this is probably the next trade setup for me. Like a little less reckless type trade setup, not like trying to catch knives on Tesla trade setup. I mean, likely we get a push back up here to the 0.5 or the 618. So, from where we're at right now, obviously ideal scenarios to buy it slightly lower, but 9.5, 6.8. I mean, there's definitely some potential for a move back up here. All right. Then we have Mosaic fertilizer. Again, just melting down. We lost that support. We're back down here retesting the lows. This just looks like a giant descending triangle. We know, obviously, that's bearish. So the last thing we want to see is retesting the lows right here, which is what we're doing. The longer we hang out at these lows, terrible. We're below both 200s. They are clearly in a bear market. So something is not lining up here with the proxy fertilizer play. Very much seems like we're coming to our target, 33 bucks. So we did the deep dive on CCJ. Nothing has really happened since then. We're getting a hard buy coming out of the bearish control zone, flipping the slope line blue, multiple green histograms at that same support level again. It's going to try to push back up here again. The truth is, though, I mean, it doesn't look terrible that it's just kind of hanging out right here. But, we had a massive run to the upside. And now we're just kind of going sideways in a range. And we're losing the moving averages. I mean, you could say that that's reaccumulation. But I would argue that's distribution. I mean, so it looks to me like all the people like me that bought down here are selling up here and are probably going to rebuy down here. Could I be wrong? Sure. And I know the uranium people are going to be mad at me. They're like, you just don't understand technology and the energy and the micro reactors. Okie dokie. Tilray is next. So yeah, I mean, obviously, this is why you don't get greedy. So trade setups played out between 31 and 38%. Busted the nuts. Come down here. Went slightly higher. Psychs people out. Looks like it's going to potentially break out. Do we FOMO in like amateurs? No, of course not. What happens right afterwards? Complete meltdown. And where are we at now? New lows. You guys know I've been saying it forever, since the beginning of time, since the day of the dinosaurs. Or no, wait, that's not right. Since after this low was put in, and we had a nice little run up right here, I've been saying I expect this to go to new lows. And here it has been consistently melting down, losing 75% after 75% after 75%. Here this little pop comes in. Everybody's like, that's it, it's the bottom, blah, blah, blah. Obviously not the bottom. Looks like we're coming down here to put in the lowest lows we've ever loaded. In my opinion, Tilray, as expected, most spot stocks, as expected, going to new all-time lows. Does it mean my base case has changed? No. I thought Democrats were going to use the, pot issue, the marijuana issue, the legalize it issue, whatever, to get votes. They did not go that route. The abortion thing was obviously enough and everything else going on. So I don't know. I mean, is this dead legislation in the water? I'm not sure. I feel like pot stocks are sort of like the old cryptos. Like they got did dirty. Couple bad actors, and yeah, I don't know. I really thought there was going to be some potential for. I think that was the biggest thing that I have been wrong about, was the potential for pot stocks and gold miners to do well this year. And both have done absolutely horrendously. But also, that's why we've been waiting. All right, UNH. So here's our big names from the Dow. Number one came back down here to the 200s as expected. Still just squeezing into this wedge. So nothing changed. This is a bullish pattern technically. So what is this telling us? Well, we're probably going to get another spike in inflation. Dow Jones going to new all-time highs. And everybody's going to be wrong. Except for us. Home Depot, back testing the 200s. As long as we're holding above these 200s, which is why we have that as the stop. Obviously, if we lose the 200s, probably coming back down to the lows, or at least we need to reevaluate. But for now, still looks likely to go up to the 786. We shall see. As long as these indicator oscillators coming down, as long as we're holding above the 200s here, this is potentially just a bullish reset. We had a nice move to the upside. We're kind of cooling off so we can go higher. That's what it looks like to me. Now, once we go higher, we get up here, we put in a lower high, it rolls over, it goes to zero. Maybe. Or new all-time highs. I don't know. Goldman Sachs, the sack-a-lack, the sack attack, the dirty nut Goldman Sachs. So obviously we talked about the 5-wave is no longer valid, but I'm just using the tool for now. This is the area we want to see hold. The 0.5 or the 618, the 200 exponential or 200 simple. Looks good. Honestly, somewhere around here looks like a decent buying opportunity for the sack attack. Somewhere around. I would try to be patient here, but there's definitely some potential. Maybe 10% down and then grab it up. Caterpillar looking strong. It looked like it was going to break down and lose this level. Shot up to a new high. Is that distribution going on there? Is that the little throw over before it melts down? Yeah, I think so. The slope line is still massively blue right here. All green. Histograms trying to come up and retest that. We're getting this move to the upside. It's happening real quick. And price is not really going anywhere, but it is going to new highs. So yeah, get ready for this one. And I could be completely wrong on this. Because honestly, what am I looking for? Honestly, I was not expecting this to push up. It looked like it was about to let go. But maybe that's the beauty of it. As it pushes up here, hits the stops, and then we can see the actual breakdown come down to our level that we're looking for. Or maybe it doesn't happen at all and I'm just completely wrong. But probably going to drop like 20% if I'm right. But again, that's probably going to look like a buying opportunity. McDonald's at support as expected. If you like McDonald's, if you're bullish on McDonald's, if you're even willing to eat McDonald's, I mean, this is probably the area to go for. Every other time we hit the 200s, it's been a buying opportunity. Still in a strong uptrend. Indicator oscillator down at the bottom of the range. Getting pretty well beat up. So probably a buying opportunity on McDonald's. 250. Amgen coming back down to our entry level. So, okay, so all the Dow Jones stocks pretty much, the big ones that we're looking at here, are pretty much having the sell-offs we expected after a nice run-up, consolidating, and then we're going to find out really soon. Do the 200s hold? Do we push up again on the Dow or not? But in my opinion, rather than just speculating blindly on one of the trash indices, hoping that it overperforms because it's been trash for so long that one day it'll be good again, rather than doing that, I think the Dow is the way to go because of momentum. And rather than doing the Dow, I think picking the, top 10 names by weighting, making up over 50% of the Dow Jones, I think picking, out of those top 10 and then picking a few is probably the better way to go. Because a couple of these charts look phenomenally, like, wow, good, awesome. And some other ones look like trash. So Visa is basically trying to break out of this descending channel. It's trying to hold the 200s. If it loses this level, it's going to, retest a couple of these fibs, start looking not so hot. If it holds this level and just goes sideways, I mean, time is on its side right now. Imagine Visa just does this for, 3 months, 4 months, 6 months, whatever. Imagine Visa just kind of trades in a range right here. Well, what happens, during that time period? What happens? Okay, if we just go sideways here and consolidate, well, we break out of the descending resistance. Confirm a breakout. Even we're going sideways. That's good. So time's on its side. If we just go sideways here, above the 200s, that's good. They're going to flip blue or at least flat and then, potentially act as support. If we just go sideways here, the indicator oscillator is going to continue to trend down and then eventually be ready for another leg up. We're in the bearish control zone. It's not great, but at the same time, we're reclaiming key moving averages. So it could go down for a little longer. Sure, maybe we go sideways to down here. But then once it goes back up, we have a substantially higher low and we're ready for another leg to the upside. So in my opinion, a lot of these stocks right now are looking, they're looking like basically, hey, long dated options, maybe not a bad idea. Or alternatively, just owning the stock and saying, hey, this is my line in the sand. But again, time is on your side here with some of these things. So Honeywell, so we had the W double bottom breakout, came back down, didn't quite get down to my very, very technical target right here. Didn't quite get there, somewhere around here, but I don't know, is it going to roll back over? Is it ready for another leg up? This almost looks like it's setting up for another leg up here. Now, again, where does that lead us? Do we end up topping out? Again, I'm not saying we have to go to new all-time highs, but it does look like it's setting up for another leg. TRV, Traveler Company, at the highs. This thing just looks ready to rip. Keep in mind, though, it has been printing and is continuing to print massive bearish divergence as it puts in new highs. So is it going to be 1, 2, 3, and then it falls out of bed? Or is it just going to rip to new highs and never look back? I would say probably 1, 2, 3 fall out of bed. So if we do get another push up here, we backtest the slope line. What the hell? Backtest the slope line, get rejected, come back down, something like that. That's going to give us a high, a lower high, another lower high, and a backtest of the slope from underneath while it's still blue. We know what that means. That's a rejection signal, bearish divergence signal. And at the same time, we're basically a high, a lower high, and then now we're pushing up here again, getting ready to put in potentially another lower high while we're literally about to put in a higher high in price action. Potential triple bearish divergence, but we're also building back up strength. So maybe this thing's just about to rip. Definitely a possibility. But it has and is still printing bearish divergence, so it's worth noting. Deer at the highs, looks like it's ready to rip. I mean, it should come down here and fill this gap. Maybe not gonna. I thought 416 was looking good, but I don't know. A lot of these things are setting up for either a big push up or a big fall. UUP, the dollar, still below the 200s, and they look like they're ready to flip bearish. And this thing is, again, I love the word manipulation, but I mean, there's a lot of stuff already priced in on the dollar. Suddenly, Japan, who has never, ever, been in the yield game, they haven't raised rates forever. Now suddenly they're raising rates, worried about inflation. So relative to the dollar, if before it was like Japan staying at 0, and now it's like, oh, Japan's at 25, maybe goes to 50, that should weaken the DXY because it's relative, and JPY is part of what it's relative to. And then also we hear Madame Lagarde out here, talking about rates going higher and all this stuff. So we're hearing like, everybody's expecting suddenly the Federal Reserve to be super dovish. We have changing of the guards going on there. Everybody's expecting this pivot. We just started decreasing the rate of increase of the rates. Whatever the hell that sentence was. We're slowing the level of increases in the rates. So we're kind of cooling down. And other people are just getting hawkish or getting more hawkish. That should be weakness in the dollar. So we did a deep dive on the dollar. We talked about it quite a bit on the last stream. I think it's worth paying attention to. Now we are printing over and over again bullish divergence here. So get ready for this thing to pop up to like 28.53. But the truth is, I mean, this thing may be ready to roll over, at least like short to medium term. Lulu came back down, lost the 200s. Not great. This is the descending channel top right here we're testing. This is the ascending channel bottom right here we're testing. You know, this still looks legit to me. It's a nice risk reward ratio. Definitely could fail though. If we start to lose this level and we do come down to 236, you know, that really is the line in the sand. So I guess it's basically a perfect trade setup. But I mean, if you liked it right here at 322, maybe going to love it at 290. I don't know. They're also, some of the info they recently gave out about, you know, their inventory and intentionally like having a massive build of inventory. I don't like to hear shit like that from companies. So I'm like, you're either stupid or lying. Which one is it? Why not both? Carvana at the lows again, still looking like trash. You know, we're at the 1.236. We're almost there. So if you like it at $4, just get it at 330 instead. All right, we made it to the cryptos, the old reliable shit coins. So Bitcoin still looked like trash. Was unable to reclaim the 821. It's still trying. You know, we're back down in the bearish control zone. The bearish control zone has been the bottom the last couple times, at least for a pop. Now, granted, you know, we get a nice pop from the bearish control zone, and then we just go to new lower lows. We get a nice pop from the bearish control zone. We didn't go to new lows this time, but we're back down in the bearish control zone. So, you know, without going down too short of time frames, this is the battle right here. We're battling to reclaim the 200 exponential and simple. So if we're above, if we're where we're at right now, like 1700, that's good. We'll probably go to 17,123, but we got to get above like 17, let's say 150. We got to get back above the 200s if we're going to have any potential bullishness for this thing to move to the upside. If we can't even get above the 200s on the 4 hour, we're never, ever, ever going to be able to have, you know, a decent bullish move. I mean, this thing will literally just melt down forever until we get above the 200s on the 4 hour. So for me, that's the main thing I'm paying attention to. Full disclosure, I do have a small position on Bitcoin for now, just to fuck with, just to have a little fun with. Nothing serious. A long position, by the way. But it's really just like a coin toss type scenario. Ethereum, I mean, it's still better than Bitcoin, still off the lows, still better than most cryptos, but it is looking real weak here. You know, the truth is, crypto's just going sideways, waiting for something to push it over the edge or, you know, back into decent territory. Total market cap hanging out at the lows, very, very bad looking. Bitcoin dominance, this is everything. This looks bad for altcoins and stablecoins. Looks good for Bitcoin. So, according to this chart, if it continues to move to the upside, which it looks like it's about to do, confirm the 821 bull cross, still macro bearish, but if it crosses right here and starts moving back to the upside, that's telling us people are coming out of stablecoins and they're coming out of altcoins. So they're just either everybody suddenly believes in Bitcoin and all the money's going to Bitcoin, or everybody is just getting the hell out of stablecoins and altcoins. And Bitcoin is probably going down too, but not as fast. So to me, it looks like we're setting up for our next crypto capitulation event. And when we take out stablecoins, we see this chart is even more bullish because the 821 has already confirmed and we're on our way back up here to the target to retest our ascending support breakdown as resistance. Now, if we get rejected here and go back down, and then maybe we go into a, you know, massive alt rally and it's just moonshots. More realistically though, we retest this level and then, you know, likely are headed up here to retest the previous highs at like 56. And this is telling us, you know, hey, take stablecoins out of the picture. Everybody is fleeing shitcoins. So if they're fleeing shitcoins relative to Bitcoin, means we're probably going down. I doubt Bitcoin starts just like skyrocketing and everybody's like, oh my God, all these shitcoins are garbage. I should just buy Bitcoin because it's the only good thing now. And then it just like goes to the moon and all the shitcoins just die. I don't think so. The people have to give up on the shitcoins first, and that's just not happened yet. Chili cheese dog, you know, it looks like it wants to come down here and threaten the lows. As long as it is technically putting in a higher low, it's still okay. It's pretty freaking beat down. It did lose the 200s again. I mean, I wouldn't be nearly as bullish on this. It had a shot right here for a big move back up. Didn't happen. Last time we got pretty beat down right here. Came down, and then, you know, we didn't technically put in a lower wick, but we came down and revisited or put in lower low closes. So for me, I got to see some kind of bullish divergence on something like that. Solana, terrible. Just literally hang out at the lows. This thing is just, I mean, I know for a while I've been just talking trash about Solana because it's straight garbage. Matter of fact, if we had to look for like an exact moment in time when I was talking trash about Solana and how garbage it was, I believe it was like $240 right about here. So this is when I really went in hard in the taint on Solana about how trash it was, right around here. So I guess I've been kind of right since then, because it's not looking hot since then. It's things are not great for Solana since I said it was a complete piece of trash. But that being said, where is it actually going to go is the real question. God. Better hope it doesn't go down to $4. We shall see. What? Where did these numbers come from? Where's my 1.5 at? I swear TradingView just comes in here and just like messes with my stuff. They're like, oh, we got your password. Bah. Gonna give them the dirt there. All right, so let's check. Yeah, 1.5, 1.382. I think we're at like the 1.236 right now. I mean, I've only used TradingView forever and always used the same numbers. Oh, wait. Yeah. Okay, I literally have no idea what's going on here. Do I just have the, oh, maybe that's an old fib? What are you doing to me, TradingView? Yeah, you know what? That's probably what it is. It was probably an old, I don't know. I always use the same numbers. Let's check it again. There we go. So for whatever reason on that other fib, they were turned off. So yeah, here we are at the 1.236 right now. Already touched it, and we're just hanging out there. So I mean, seems very likely we go to the 1.382, which is 760, 1.5 at 560, or 1.618 at $4. So I mean, next level to watch is $7.55. But to tell you the truth, I mean, I wouldn't touch any of these like meme stock cryptos that are affiliated and tied up with like FTX and Scam Bankman. Oh, which by the way, I reused that thumbnail just because he posted bail 250 million. Now, that's not bad, right? So he put up 25 million. Obviously, he's broke, like he said. He definitely didn't launder any money at all, especially not to his parents, where he will be staying, like the man-child retard that he is. I mean, he's a genius, and he's just fallen on tough times. So let's just think about how much sense this makes. So dude is like an international scammer that hasn't even lived in the United States for years. Got extradited. He's out on bail for 250 million, which means typically with like, you know, your typical bail bondsman, you would have to post 25 million in bail. Okay, so that he's not going to just skip out and leave behind 25 million. They took his passport. So that's fine, right? His parents will keep an eye on him. So instead of putting up 25 million, which is like the standard 10%, his parents put up their house, which is valued at $4 million. And then they also said like, Sam won't be a bad boy, and signed for him like some kind of fucking grade school permission slip. Like, what in the actual fuck? I don't know. Very, very strange. Very strange. Definitely nothing shady going on at all in this situation. So obviously Sam will never be seen again. Congratulations. And to all the people, that were expecting the old flip, obviously there is a leaky ship. And, once the orgies stop, you start looking around and thinking, I don't even like a lot of these people. Obviously, some of them narking on old Sammy. And people are wondering how they already pled guilty. It's called a plea bargain. That's why. They're like, it's impossible to plead guilty because all they've done is been accused and charged. So why wouldn't they at least fight it or plead not guilty or whatever? It's called a plea bargain, okay? They sold out. They're rats. They're rats abandoning the sinking ship. They sold out. They cut a deal with the authorities. They said, hey, if you put me in a cushy prison for 100 years, call it 50, I will narc on Sam and give you everything you need. That's exactly what happened. From two main people. One at Almeida, his Harry Potter girlfriend, and then obviously one at FTX as well. So he's screwed. He's fucked. He will literally never beat the case. The best case scenario for him is to either run away and do like a face-off, face swap type scenario. Like, take his face off and then put a different face on. That seems viable. Or potentially that's probably his best bet right there. You'd probably drag it out for like 10 or 15 years, go the Elizabeth Holmes route. That's definitely a possibility too. So either one of those. Chainlink still look like trash. Honestly, if it breaks down from this level, things could get pretty nasty here. We have a huge cluster of support back here, which definitely is a thing. So this is basically, this is our first line of defense, which is basically where we're at right now. So it could go slightly lower to like 450. But if we lose 450, there's a little heart line in the channel about 286 or something like that, which really rings home because that's like when we were buying this. And then honestly, after that, it's like $1.50. I mean, I don't know how nasty this bear market's going to get. I'm not going to get like too crazy predicting like, prices in the pennies for these trash cryptos yet, but Avalanche, very, very weak. One of the few cryptos that actually just made like new cycle lows. And again, just tied up with all the wrong people in the crypto space. And is anybody out there watching Kevin O'Leary just completely lose all credibility and just completely embarrass himself? I mean, I don't know if anybody actually watches all the boring ass shit that our government does, but like seeing him speak before Congress was an absolute joke. The dude is literally going on like a 10-minute tirade, which is fine. I do that all the time. But he's doing it like in front of Congress, talking about how CZ is mean. And if it wasn't for bad CZ, Sam Bankman-Fried would have to spend the billions to buy back the stock from the CZ, and then the FTX would be good. The guy was a fucking embezzler for years. Kevin O'Leary is trying to act like, hey, there wouldn't have been any problems if it wouldn't have been for mean CZ, and now he's got all the power and we got to stop him. Are you retarded, Kevin O'Leary? All the CZs in all the world didn't have anything to do with the embezzlement scheme that was being run. You fucking moron. God. I know I say I'm going to do a lot of stuff if I ever see these people in real life, like smack them in the goddamn face. But Jesus, Kevin O'Leary, I want you to wake up. I want you to walk in front of the mirror, and I want you to, wind up. Really wind up, okay? Put some elbow grease in it, and I want to see you slap box the shit out of yourself. I want to see you you need to knock yourself down on the ground so long that we're wondering if you're still alive, and then eventually get back up with tears in your eyes, and then apologize for being such a goddamn moron. You accept $15 million, completely get thousands, probably tens of thousands of people wrecked in the biggest crypto scam and one of the biggest scams in all of human history, and then sit there and play fucking dumb and try to blame CZ. I'm not saying CZ isn't a scumbag, but there was clearly embezzlement going on. So stop defending your little boyfriend, okay? Jesus. I mean, I know you like cute little boys with afros, but it's over, dude. Pick a new one. Polka Dot Rec City, new lows. This thing is literally just melting down, and it's in the real danger zone down here. I mean, we have this descending channel, and, you know, 1, 2, not really touch right here, 3, 4 touches on top of the channel, and 1, 2, 3, 4, 5 touches on the bottom of the channel. If this thing decides to come back down to the bottom of the channel, I mean, we're talking about, like, you know, $2.75. We're talking about another 50% haircut. Matic, I mean, this thing is surprisingly resilient. It's holding on for now. It's one of the best looking cryptos technically. You constantly hear like good shit about Polygon. Like honestly, I mean, there's not a lot of good cryptos, especially in bear markets, that are doing like decent shit. I think Matic is probably like one of the best technical cryptos right now, and probably fundamentally as well. Now, that doesn't mean it doesn't take another leg down here to 50 cents, but I don't know. If you were like, hey, you know, if you have to put some money somewhere, where are you going to put it? It's the Dow Jones, right? Momentum. And if you're like, well, what about in the crypto space? You know, we want to keep 3% or 5% in crypto. Where do we put it? I mean, it's got to be obviously Bitcoin. But if you're going to speculate on some altcoins or whatever, I guess speculate on decent ones like this one. You know, the same way you always hear terrible shit about like Solana or Avalanche or something, like just always something bad is coming out. Just one terrible news article after another. Yeah, I feel like it's the opposite for something like Polygon, Matic. Very interesting. And, you know, currently, right now, I have traded in and out many, many times for Matic. But currently, right now, like I don't have like any decent position or anything. It's not like I'm trying to like shill for my crypto or anything like that. And speaking of shilling for my crypto, everybody should go all in on XRP because it's the future. The central banks have officially announced that they're teaming up with an undisclosed entity, and they're going to spread their XRPs around for everyone. Okay. So this thing is holding on for dear life, literally for dear life, and it looks ready to break down to 25 cents. So I'm expecting a 25-cent breakdown, or breakdown to 25 cents. It is possible, however, that we continue to trade in this kind of range right here. God, I mean, 37% move to the upside. Does that even seem possible? Do I sound insane right now? Do I sound insane? I mean, here's the thing, okay? It's important to, whoops, wrong one. It's important to be realistic, okay? If we're in a bear market, you should be bearish mostly. If we're in a bull market, you should be bullish mostly. But the truth is, sometimes you want to have longs and shorts open at the same time, and some are going to be right and some are going to be wrong. So like, even if you're bearish on the markets overall, it's okay to long the strongest and short the weakest sometimes, especially like if you have a super weak like crypto market and a super strong stock market, or a super strong crypto market and super weak stock market. It's okay to be both long and short at the same time. You know, essentially work like different angles on the bull versus bear trade. Am I saying that we should all rush out and jump in XRP for a 33% potential upside and 6% downside with a 5.2 to 1 risk reward ratio on, you know, what is arguably one of the trashiest, most garbage cult-like cryptos in existence? No, I would never tell you guys what to do, because obviously you'll just end up living in a van down by the river. But there's decent trades up here. We technically broke down from the support, but did a bunch of times. So I don't know. There might actually have some legs on it. Now, what if this thing underperforms? It's still like 3 to 1 risk reward ratio. So there's actually a decent argument to be made. And you're like, wait a minute. You just said how shitty XRP is. It doesn't even make sense what you're saying right now. Yeah, I mean, it doesn't matter. I don't really care. I'm not buying it to hodl and like one day give to my kids. Okay, it's not an investment in the future. I'm talking about scalping it, okay? I'm talking about raiding someone's camp in the middle of the night, kicking in their tents, and using a kind of sharp, kind of dull and rusty blade that hasn't been appropriately cleaned, and just removing the scalp. Okay, just removing a little bit of the scalp. And then I'm just going to, I got a little pouch or something to put in there. I'm just going to slap it in there. Okay, and then just forget about it. Just going to take that with me. I'm not like setting up camp. Okay, I'm not going to like get integrated into the, group. I don't want them to let me join their civilization, and start building with them. No, I'm talking about scalping the XRPs. All right, we're almost done. Thank God. ADA, Cardano. So just getting absolutely wrecked. Almost made it to our target. We did fall short. So I'm going to admit on this one, I was completely wrong. At $3, I told everyone to dump Cardano, that it was going to go to zero, or at least trend in that direction for a long, long time. I accurately nailed the 44-cent target, which was about, 85% downside. So that was good. Accurately nailed the 23-cent target. But so far, and now keep in mind, I want to be realistic here. We went down 92%, but as of now, that target was off. I was 0.0087. We'll round it up. I was 0.009 pennies away from the target. So I was wrong. I was wrong about this. I said we were going to go down 93%. We only went down 92.7%. So I apologize for that. And that's why you shouldn't listen to me, guys, because I'm wrong consistently. And last but not least, everybody's favorite, speaking of CZ Binance. This thing, so it was very important to hold the descending resistance trend line, which is now support, which is why it's green, because it should be red, but we broke above it at support now. And I'm too lazy to do the two-tone. So we're holding above it for now. We're not able to reclaim the 236 yet. We're below all the moving averages, the 8, the 21, both 200s. They're all angled to the downside. It looks very weak, but it is holding above a breakout level, and it is holding the macro blue 236. So I don't want to get crazy bearish on it, because honestly, I think short term it probably tests back to the upside again. And when it does test back to the upside, or if it does test back to the upside, it could do one of two very important things. We obviously have our macro low right here. Right now we have a higher low. And if we look at this little channel scenario, we see some pretty clear interactions at the heart line. We obviously have two touches on the top. We now have, arguably, potentially, depending on how you draw it exactly, I would going on closes. There's a little wick out at the bottom a couple times, wick out at the top. But it's basically operating inside of an ascending channel. So we have a descending resistance. We break out of that resistance. We start to form a potential uptrend. Now, this could easily break back down here, lose support, lose this, and that wasn't even low. And then, air pocket goes to zero. It could definitely happen. But for now, if we're holding down here, this is, other people are going to say, okay, here's 2 points on the top and 1 on the bottom. So this is where it should stop. And this is also where it should stop based on that. So this is a key area where people would be like loading up if they're bullish, if they think this looks like a breakout, if we're going to threaten back up. So again, I obviously have talked about a terrible, terrible, horrible scenario where BNB just drops massively to like $40. But also, there's definitely some potential for like 22 to 56% move up here. Now, full disclosure, I'm not buying the BNB because, there's just, to me, this is, everybody talks about Tether all the time. This is probably like the riskiest crypto right now, in my opinion. If we lose these levels, it has a lot of downside still. That being said, 8.5% to 20%, not really like a viable trade right there. But if you are going to retest the top of the channel, or even, come back up to the 0.5 after putting in a higher low, we're talking about like 40 to, 60% upside. So worth watching, worth paying attention to. If it was anything other than BNB, potentially worth trading, but I do not like the way this is setting up here. So, all right, that's it. We're going to go ahead and wrap it up there. We made it through everything. We made it to the end. Talked about the cryptos. My energy level went from 9 to 6. Hopefully you guys enjoyed it. Appreciate everybody tuning in today. What's up, Parag? Good to see you. Merry Christmas to you as well. Thoughts on Coinbase stock as long-term investment? I don't know, man. Here's my problem with Coinbase as an investment. Like 90 something percent of their revenue, last I checked, which is a couple months ago, it was like 98% of their revenue comes from trading fees from retail customers. So clearly there's a massive trend going on right now towards zero for fees. Okay, now of course there's a battle between payment for order flow, should it be legal, all that junk. But the truth is, if fees are trending towards zero for trading, and Coinbase gets all its money from trading fees from retail, that's a terrible business plan. So where's their money going to come from in the future? Custody? Sure. I think it's a couple percentage of their income right now. They still have a lot of money on their balance sheet, billions. They're only bleeding, tens of millions per quarter. So if they're only bleeding tens of millions and they have billions, I mean, they should be able to outlast it. But they got to pull a Fuckerberg and change it up. Obviously it didn't work out for Meta yet, but they have to do something different because obviously their business plan's not going to work going into the future. They have to figure out where they're going to get money from, and it cannot be from ripping off, regular people. I don't know. Maybe it can't. Maybe people will just continue to get absolutely raked against the coals by Coinbase. But I mean, I remember their fees used to be pretty competitive, and then they went up to like 1%. People don't put up with that for too long. And honestly, like everywhere else is basically free now. So I think Coinbase is a horrible investment until they change their business plan. Does it mean Coinbase can't go up? No. I mean, there's a reason it's getting wrecked right now. It's because other people think the same way I do. I'm not saying that it goes away. I'm not saying there's not a possibility for a legit future where the stock does well. What I'm saying is the business has to pivot. There has to be some fundamental change in how they make their money. Or for me, Coinbase is a zero. What's up, Hex Evolve? Good to see you. Merry Christmas to you as well, my friend. Prague says, great point. Awesome. So yeah, I guess we'll go ahead and wrap it up there. So this is our Friday morning market wrap up. I guess now it's afternoon. Hopefully everybody had a great week. Lots of craziness. I expect lots more craziness to follow. Keep your eye on all the things we talked about. Remember the macro picture of what we talked about at the beginning of the stream with what happens with yields, what happens with the pivot, and what happens with the stock market. Remember that the inflation is the reason. The inflation is the reason that the stock market ran up so much. The money printing is the reason. The fiscal and monetary policy is the reason. So if that's what we needed to get to new all-time highs, and we know that now it's rolling over and we don't have all that stuff, it's much less likely that we get back to all-time highs. And vice versa. If Peter Stiff is right and inflation comes back, he's going to be still running his, dirty little Hummer talking about, oh, the Dow Jones going to crash and the punch protection team and it's going to zero and the markets are trash and by the emerging markets and all that's going to be wrong, even though he could potentially be right about inflation. So just remember, there's a lot of, stories people are telling out there, and they sound good. They sound like real stories, but you know what? I got a buddy, and every time he hears a cool story, he just acts like it was his story and just tells it. So careful when you hear stories from people. Careful of my stories. Maybe I'm full of shit too. Maybe I'm wrong about everything, and I'm just mean. You said you hated XRP, and now there's a trade set up. Hexaball says, your keys, your crypto. Don't want centralized exchanges. Yeah, I mean, it's all about trade-offs, man. It's all about trade-offs. For convenience of not using a decentralized exchange or liquidity or whatever you're using it for, you give up your security. And it's the same thing between centralized and decentralized exchanges, centralized and decentralized actual like cryptos. It's centralized and decentralized in the entire space is important, whether we're talking an exchange or just an actual crypto or whatever. The same way security, actual security. Sure, Bitcoin might be a little slower, but it's also really, really secure. So if you're like, oh, but it's too slow for me, old boomer coin, I want something fast and easy. Sure, you get something fast and it can be much better and faster and do a greater job, but you're giving up security because that's what makes Bitcoin slow, is obviously like the repeat validations of transactions before they clear. So in the end, it's all trade-offs for crypto. The whole entire space, blockchain, all of it. It's all trade-offs. And you're basically just trading off like, hey, do I want expensive fees or cheap fees? Do I want good security or mediocre security? Do I want fast transactions or do I not really care about transactions? Do I want centralization? Do I want not centralization? Do I want green proof of stake versus, mean proof of work? All that stuff is a factor. And in the end, I think that's why there's going to be multiple winners. It's a little too early to tell who those winners are going to be. But I think probably the best thing to do in the next bear market, as we go into a bull market, the next thing to do is identify those themes and say, hey, there's going to be some people that want discrete cryptos. So let me look for the ones that are, more discrete. There's going to be people that want security. So most secure one. So, you pick winners from different categories. And, potentially some are going to outperform. You're going to be wrong completely about some. Others are going to explode to the upside and you're going to wish you put more of your stack in there. But the truth is, the most important thing is identify those specific categories within the crypto space and then diversify, because we don't know which ones are going to be winners. We don't know what the next blow up is even going to be, let alone what the next come up is going to be. So yeah, Merry Christmas, Happy New Year to everybody. I'll still see you guys on Sunday for our stream. We're going to do a little more light stream. I'll probably have a couple drinks, enjoy ourselves. It's going to be the regular time, 8 p.m. EST. So that's on Sunday. And then we'll do our monthly and yearly wrap up on either Wednesday or Friday. And we'll just only look at monthly charts. And now we're going to start talking about like the big trends for 2023 and how to position for what is going to, there's Jim Cramer says it. If there's one thing he says it's correct, there's always a bull market somewhere. So we're going to find it and we're going to take advantage of it. We're going to abuse it in a nice way, though. In like a kind way. We're just going to take advantage of it a little bit. But yeah, that's it. Wrap it up there. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is Friday at 12:34 p.m. Eastern Standard Time on 12/23/2022. I am, of course, Crypto Trend Trader, and I'm getting the F out of here. Everybody have a great day, great weekend, and I'll see you guys on Sunday. Merry Christmas, Happy Holidays, and if I don't see you before then, Happy New Year.